Hi, Planty here, the live show Monday. How is everyone? I've got the Discord page up there, just Alex's latest. If you haven't seen it, I'm sure everyone has. Back on the 20%. Always worth a go. There might be better ones later in the week following some announcements, but you never know. You might see some of that. Bit of merch. Hi, Bletchley. Always first in. Good man. Savad, welcome. Do you guys have anything you really want to look at today? Any questions? Any expectations for anything for the week? We're back on data. There's not going to be much talking heads this week. Chris Bruce, hello. Was Friday Market Madness just a perfect storm of data, month end, or liquidity sweep? I think, it was a bit of a mixture. We talked about it being quite a strange under-over type thing going into the month end. It's since transpired that the hedge funds have been selling all week into getting short and buying Europe, etc. So I would expect some of that to have unwound just into the end of the month, and we got the big rally. I don't know whether there was a buy program. It just felt crazy, didn't it? With about 2 hours to go, it was just incessant rally back. One or two heavyweights that had been holding on, and in as we'll see in the charts and the pack, Nvidia actually sold off on Friday's session, and yet the S&P equal weight was up massively. So there did seem to be some kind of rotation program going on. I don't think we're necessarily finished with that sell-off situation, but we're getting close, and I'd like to buy this next pullback if we can actually put it in place. And we'll go through that again. It's very similar to a lot of Friday setups. If anyone was on Friday, you'll remember that we tried to predict where the connector might go to, and then where an equal leg sell-off would go. So it has bounced, and we're very close to what that connector is, which you'll see on the charts. So we could have a lot of sell-offs that meet up with the upper trend line, and it's a mixed kind of data week. The dollar doesn't seem to have finished its double leg correction. It's only got a little bit more left, but that could just hold us off. And then some of these data points are set up in quite a strange way now, and we'll go through those. But we could easily see sort of growth light with sticky inflation, which will spook a few people, and then by the end of the week, there's a potential chance for non-farm payrolls to come in quite low, which will just get the whole Fed put thing going, which will rescue any of the sort of growth unwind situation. So the charts are kind of suggesting this sort of risky off type way, but leading us into a sort of final capitulation, and then it's all guns blazing, I think. But we'll work through that. Oh, I haven't. You will be. Sorry, I haven't muted my speaker. Sorry. That should be better now, if it was there at all. So is there anything that anybody wants to look at before we kind of work through the preview? Anyone got anything they want to talk about? I thought there's something interesting, as I said, on the non-farm payroll. Stuart Kaiser, who's the Citigroup strategist. Hello, Sean B. Was saying that this is the time when there's potential for a drop down to something like 140 on non-farm payrolls. He's been saying 150 is the danger point. And that is a classic. You're getting rate cuts for the wrong reason coming on. So that is why there's the potential over the week, if we are looking like the data is continuing to be soft, people will start factoring in that they've waited too long and they're on the back foot, the thing we've been talking about, but it will work as the Fed put. The whole point that them changing the rates quicker than anticipated would lead to the markets hanging on. But is there any danger that the stuff that's growing isn't growing? I mean, NVIDIA, the whole AI tech side, they're coming out with more and more positive news, aren't they? Over the weekend, they've come out with their third chipset. AMD are coming out. So the capital spend is going to carry on there. In terms of investment, it doesn't really matter at the moment what's happening to a lot of the others, because the heavier weight stocks are doing the heavy lifting. We pointed it out last week that if you start seeing some rotation from the heavier stocks into the lighter ones, you will see pullbacks, even though people are buying the market. The fact that there is chatter out there that hedge funds have been increasing their shorts on the US, but still keeping them in equities, means that the overall risk-on situation is there. I hate to sound like a broken record, Sean B, but any new info on gold and US dollar, much appreciated. So we'll run through it from the way I say. It can be boring that I think we're still stuck in the same pattern, and that is on both the dollar and gold. The good thing about gold is we're about to do, I think, the wave 3 down, which will be quite quick and aggressive. So that will help us get to where we need to be for hopefully some dollar support to start driving it up. As I said, and I put in the meme, etc., make a note to yourself, buy silver once gold bottoms out. The upside for silver at the moment seems to be much more geared. So make sure you maybe do half and half at least when we see the turn. So if you remember a few weeks back, we talked about the June, September work that Bank of America had done on US equities. So even though there's some fading going on from some of the quicker money, that'll probably come back in pretty quick once things settle down. And in the presidential years, the fourth year, then you tend to get this outperformance between June and September. 75% of the time, I think it was, and on average, 7.5% return. 7.5% is an interesting number because we'll talk about that in terms of NVIDIA in a few minutes. And then Julian Trimmer, who is a guy you'll see on my LinkedIn people that I follow. He's at Fido, very, very shrewd team he has there. And they have also done the presidential cycle work. And as you can see here on the chart that I've put in the pack, if the midterm year, which is the second out of 4, happens to be a down year, then you get an even more pronounced move up in that June period. And then I also said today, there is people on Bloomberg talking about what happens when May finishes 10% up or 10% plus for the year. What happens for the rest of the year? Only 2 times has it ever gone down from that 10% plus. So you've got a lot of support here to buy this market for the next quarter, for the next 3 months, really, once we've found the bottom. And that's what we're looking to find, which I'll talk about in a minute. So it's worth, having longs into weakness. And if you can find early entries, then the whole thing may finish its consolidation and go. But I think we want to be wary of the fact that it can pull back some way from here still, relative in terms of trading terms. So we need to be vigilant, and I think we need to walk gently through this week's data and hope that does the work for us. On a similar vein, Deutsche Bank have upped their H2 forecast for the Eurozone growth and kept the US exactly where it is. So that's another argument for buying the DAX in the UK that we've been talking about. And NVIDIA is now bigger than the DAX completely in terms of market cap. It all sounds a bit crazy, doesn't it? There must be value within that. So I'll move on to that in a minute. Let's just go back to that. Yeah, as we said, the hard data, what you'll call, it's worth calling it your red book red folder data, the ISMs and the GDPs and the non-farm payrolls and the JOLTs and that sort of stuff, they're all generally continuing to come in on the easier side. And then it's all the incremental surveys that aren't necessarily as robust or as widely taken, etc., that are coming in softer. Sorry, that appear to be tightening. So we've got the right mix from the data at the moment for being on this definitely no rate hikes and potentially moving into the easing cycle. And then we're going to have, obviously, Bank of Canada and ECB are nailed on to move this week. So regardless of where the US and Bank of England are, for instance, there will be pressure from their side to not get too far out of kilter, which is other things that will start to be factored into people's strategy. So you get data plus the fact that they're behind when they want both of the Bank of England and Fed wanted to go first. So there's bound to be a bit of ego in there, which is what I talked about. The backdrop for the ECB, hopefully everyone's up to speed, is that Nagel's the man to follow, really. He's the most hawkish. He's given them June, but has said he wants September before they do anything else. Schnabel backs him up all the time. And we'll see a lot of rhetoric. And the fact that you had wage data coming in slightly higher previous week, and then last week, CPI coming in slightly higher than elevated expectations, there's enough reason for people to just jump on that and be happy. They don't like having to make decisions, don't like arguments, particularly in the ECB. So that would make it quite easy unless data changes. So we've been expecting 3 to 4 rate cuts in the Eurozone. That may still happen, but I think there's going to be a delay short term. So again, once we can get the connector consolidating waves out of the way in EU and GU, they are still probably primed to break. And as soon as the dollar goes into this topping out phase, then that's when we should be able to make some progress. It's been quite frustrating, hasn't it? We've been grinding up and coming back, the old almost nesting situation for a few weeks. So yeah, I just thought, I don't know how many of you did actually watch Moisey's Pips and Pints. I still say it's a good idea for you to have a go. There's some brilliant stuff in there. And we were talking about the difference between now, because you've got growth in the AI stocks, earnings, etc. It's completely different cyclical nature to the cyclical backdrop to this, secular change. Literally, if you were trading in the 2000s, someone only had to mention that they were setting up a website and their stock would just go banzai. Absolutely mental. And I saw on another site last week someone showing an email that Bill Gates sent around in 1995-6, imploring everybody to concentrate on the future, the internet, that is where everything would come from, and wanted all the company to put all the resources behind that, etc., etc. And it's very similar to how everyone's going. Everything is AI, way in advance of its actual probable usefulness. So the fact that they're earning so much from it at the moment is quite important. The thing we've got to watch out for is the kickback from its customers. Its customers are its rival large cap tech people at the moment. So that's got to be a worry. But I'm sure they're expecting proliferation of capex spend into AI to broaden out. Obviously, AMD came out this weekend as well, saying that they've got some kind of rival chip coming. So they're not going to be left on their own. The worry was that there'd be a lack of supply, and that might have derailed things. This whole June to August setup, something's got to potentially just take the wind out of the sails towards the end of August, and the end of August will be the Q2 update for NVIDIA. So that'll be interesting. Undercurrents that are backing up the fact we should still have this rally when this current structure breaks and finally finishes. You've got buybacks. Buybacks are massive. They've all come in since the end of Q1 results. Again, there was some good chatter at the weekend. If you take out the Mag 7 from the market cap of the S&P, then the average market cap left, the buyback that Apple is doing is something like 1.7 times the average market cap. Absolutely huge buyback. So why aren't NVIDIA doing a buyback? They're doing something even cuter. if you do a stock split, it's very, very rare that you would see downside to your stock. Why would that be? Because the value is not changing. This is with the buyback, at least you are reducing the amount of shares and changing the certain value metrics. With the stock split, all you're doing is changing the stock price. So 11.50 split 1 at 11.50 will suddenly be 10 at $1.15. Now, a lot of people I know good friends, experienced market people are buying some of this before the June 10th stock split, just because they know this is a pattern that repeats, and they're expecting that stock to rally. Now, remember, the stock is actually doubled this year, Nvidia, and at the moment, the weighting is 7%. So that's responsible for 7% of the movement in the index. Coming back to 115 cents, $1.15, it's not beyond the realms of possibility this thing rallies to $2 fairly quickly without masses actually changing. I mean, they are still on an upward path, but it hasn't really had a stupid melt up yet. It's doubled this year, but stupid, crazy melt up would be going up 3 or 4 times. So it could easily double from here and not look like it's moved much after the stock split. Psychologically, people are crazy enough to do that. So that in itself would give us another 7% of rally. Well, we don't actually do stocks, Chris. It's a good question. So Chris Bruce is asking, how does a 10-for-1 stock split work on CFDs? It'll just be reflected in the stock price, in the index price. So what I'm saying is, if they do a 10-for-1 stock split, nothing will change but that stock is more likely to move up than down as a result, because that's what generally happens. It's a crazy anomaly. It's what companies do when their stock gets too big. People get put off by large numbers, then they're able to do all sorts of financings and people will back it and they'll pick it up because they think they're getting it cheap, and before long they actually forget that it did a stock split. It is mental. So that will, whatever that move is, will be reflected in the index. And like I said, if it were to double, that'd be adding 7.5% to NASDAQ, S&P, etc. So it's something to have in the back of your mind. We really must watch what Nvidia is doing, because it is getting so big now. It's absolutely huge. And it said because that held up last week, it took the market a couple of days to actually sell off, because it had such a sort of a braking mechanism to the sell-off. Any other questions around anything that I've said? So I like the meme that I see about Nvidia is that they're selling shovels. And that's a good way of thinking about it, is that it doesn't really matter what the end product is that these people create from AI. They're just creating the infrastructure, the backstop. So when you've got a mining craze going on, like the old Klondike Australian mining boom, then the people who made the most money were the guys that were setting up the camps and offering all the tools. Boom, boom, boom. And Bletchley, what were you saying? Not expecting Bank of England to make a cut before the election. Well, they're supposed to be neutral, aren't they? But we'll see. I mean, the data worked against them slightly, but ever since the CPI data came out, every other bit of data has been slightly weak. It'd just be interesting how that plays out. I still expect them to, like I say, not cut, and if they're going to go, they'll go after the election. But you never know. Bailey is a bit of a strange individual, and they have got the makeup of that voting committee is 5-4 dovish, with Bailey having the casting vote. So they could force it through if they wanted to, but it would be unpopular. So yeah, I was talking about the yen, UJ. We know that the danger is if they have to start selling their US Treasury holdings as a yen intervention. We'll look at that chart, and that does need to have one more high to confirm that it is still in the bullish phase. Otherwise, it's just doing a consolidation. There is a Japanese 10-year auction this week. We need to watch that. There's chatter that if the yields go above 1%, then there'll be a lot of money coming home to invest in that, and overseas investors may well come in. If you can get the momentum going in the actual yen and create 3 or 4% of return, then that matches going abroad and earning 5% in short-term treasury bills. So you could actually get a bit of momentum into that play purely because of the FX return without the bonds having to really go anywhere. So that would help. That would take the pressure off the Bank of Japan if you could get institutional investors doing the heavy lifting of playing the treasury dynamic. Gold we'll have a look at in a minute, but there was a good chart the weekend showing how central bank gold reserves are now bigger than the euro holdings into second place. Well, that actually makes sense because, as we know, we certainly know, the Bank of International Settlements, it's the second official reserve asset now, so it should be in second place, and that is likely to get bigger and bigger. And second reminder, buy silver when this gold sell-off finishes, because that's even tighter. OPEC Plus, absolutely rubbish on Sunday. They've extended it slightly into Q3 for the existing cuts. Well, we needed more cuts and extending longer, and they actually spent more time letting Saudi Arabia pump more to get them into line with other people and actually creating a roadmap for unwinding it. Well, that isn't going to happen, really, because, or if it is, then we should be doing full port selling on oil for H2 Q1 next year. It's the kind of thing we were talking about, the danger of this being on the verge of contango for the wrong reasons, and it is the expected forward price that's the problem. That is because there's an excess supply. This isn't doing anything to stop that. America will pump. It's one of the few things that they can help with from Biden's perspective on inflation. They can keep oil prices low right into the election. They will do. They'll take all the special reserve down, knowing full well that if that works and when the Saudis, when OPEC Plus come back, the price will get hit and they'll just refill the special reserve at that point. So all very clever. Sean B, what's my thoughts on US hitting a recession and how will it affect the markets? Well, it could hit a recession. Inverted curves have never not done. This has been an anomaly. It's all, and the fact that there's 2 years of lag effect in a lot of the interest rates, and they're still talking about in the background, the data might mean we have to put the rates up. It's very unlikely. But as I've said, and this is what could transpire this week, when the data goes in a big way. I've mentioned it in here as well, and I advise you to keep an eye on it. Atlanta GDP now, the one that is up to date. Every time a factor gets released, they put it through the model. Last week, when GDP missed again on the second reading, there were a lot of people on Bloomberg saying, "No, it doesn't matter because Atlanta GDP is showing decent growth in Q2." Well, as soon as last week's data went through and Friday's print came out, that dropped from 3.5 to 2.7. So, that is falling through the model quite quickly. So if we have any real weakness today and on Wednesday from the ISMs, and then a low non-farm payroll figure with no upward revisions on previous months, then there will be quite a lot of worry. And that is why I still think, and we'll look at it on the charts soon, is that we could have this sell-off first and then rebound on the fact that rate chatter will come back very quickly. The Fed put coming into force. So there's still a chance of the recession. It'll be quite shallow, I think, because they'll react quickly. And we have got underlying growth in a lot of the sectors still at the moment. This is all really coming from the employment side of things. What we don't want is to have any semblance of stagflation. So what might get things spooky today is if PMIs and ISM are flat to down and the prices paid stays up again. It'll be stagflation comments everywhere, and then that's a market negative as well. So there's a lot of things that are there in the background affecting this whole kind of dollar holding up narrative until it doesn't. It's a bit technical, but we've got this inverted yield curve, and a lot of people will show you that from recessions, it's not necessarily the fact you got inverted yield curve or the fact you have a recession. It's when that yield curve changes and starts steepening, because it means that things are going wrong. So often you get a rally into the time when they actually do it. which again will probably fit with this whole rebound narrative. We're looking for June, August outperformance. It's highly unlikely they're not going to go in June. They might do July or September. Most likely September, unless something really, really accelerates the pullback in growth. So that all would fit nicely with the narrative we're trying to present for this next 3 months. Talking heads, we won't hear a lot from them either, because obviously ECB are on lockdown and America is effectively, they don't like to do anything in the week before or during. Cook speaks on Friday, but she won't be saying anything other than a rehearsed speech. So we start off really after ISMs today. We've got JOLTS tomorrow. ADP oil data is back on the right day. And then it's ISM services, EIA on Wednesday. ADP private payrolls, they come through on Wednesday, don't they? That feeds through to the non-farm payroll private number. I'm just saying, Aussie PMI today was slightly up, but I called that in line, really. They won't worry about that. Japanese, slightly lower. China, we said last week, Kexin PMI would go up because the nationals are out of line with it. That's where the weakness was. UK and Europe, they were more or less flat as well. So we're just waiting for the big boys. And then you can see it all in the preview. Loads of trade data this week. PMIs everywhere across the globe. Employment data. And there's a strange Chinese trade data at the end of the week after everything else is finished at 7 minutes past 4. Not really seen that before. Not sure what's going on there. Maybe they've put the wrong timing in. No real talking heads. So we might as well go and have a look at some of the charts. Any questions? Anything we want to particularly look at for sure? Sean B, do you reckon there's going to be a US recession? Bletchley, yeah, the non-farm payrolls with 4-week jobs average being poor for dollar. It will be eventually, yes. It's starting to be at the lower end. Boom, boom. Hello, Nova Paul. Hello, Anonymous. So any questions from the floor, or shall I just move on? Boom, boom. I'm just checking my chat, see if there's anything interesting. So gold is all over the place, isn't it, at the minute? Hell of a range. Right. If we go to gold first, because there's a lot of you that like that, isn't it? So all sorts going on today. So I posted a few times on my chat. I still think we're in this down channel, which should take us to down here, the lower part of the trend channel in a 5-wave move to 2250 kind of region. Why is that? Because we've had a 5-wave move down from the top over here. So from the all-time high in a consolidation phase, wave 4, minute wave 4 in the way that I've got it written, still within the minor wave 3, the red waves in Elliott wave theory, the one that does a lot of the what they call the motive work. It's a kind of daily intraday time frame, so that is where a lot of the action obviously takes place. So I think we've done 5 down, a double correction for the B, double consolidation, and then we've been working our way down in a nesting 1-2 scenario. So 1-2 at the high degree, and then some subwaves below that, a 1 down. To me, we're tracing out an expanded flat 2 at the moment, which is in place. We talked about the head and shoulders that was kind of in play at the 4-hour mark, which was invalidated. We had one close below it, which is this red candle here at 3 o'clock to 7 o'clock on the UK, on the GMT plus 1 time frame, the current UK timing. But that didn't hold. It bounced up in the 7 to 11. So that was invalidated straight away. And obviously, if you want to then change your mind and say, oh, well, there's a head and shoulders there to the right, on the right, within the right shoulder, you generally ignore that because you've got the previous relative highs to the left. It's very rare that you'd have anything like that being valid because it should be really taking part with the highest relative head in the setup. So I spent quite a bit of time trying to see if we've got any kind of price action triangulation going on, and it still seems to be in a kind of parallel situation, which kind of tells you that the first bit is a legitimate consolidation wave, and then we're nesting within that to suddenly break the lower barrier. I think that is still where we are on the 4 hour, and then similar on in the 1 hour space. We had the breakout on the PCE beat on Friday that faded, and we did mention during the morning that we thought that might break the trend channel and return back in as a head fake. So a lucky arrow there. But if we believe that we're in this nesting part of 5 of these black waves lower, 5 of the minute waves down. No, sub-minuet, no, they're actually really small ones. Microwaves. We're in microwaves, aren't we? These are the 5s. So, yeah, sub-minuets and micros. Why am I saying all these strange words? It's just we're talking to Veshinu, who likes to draw Elliott waves, but he keeps using the same labels and sizes, so it's difficult for you to tell which wave he's talking about. So we try and label it up, and with different labels for the different wave degrees, the fractal nature, so that you have an idea where you are, and that also helps you. If you can negate something in one time frame and 1 degree size, then it will very quickly concertina back to get you to where the actual pattern is. So it's, as I've said before, it's good for negatives and positives. That's why I use it. So again, like I said, we've had the overthrow. We've come back in. This structure here looks to be small stage 5 waves. We've had, again, what I think is an expanded flat. What do I mean by that? It's that you've had a 5 wave down to make a low. So if you're consolidating, you'd expect to always go in the reverse direction of trend without putting a new low in. But there is one of the flat setups does allow for this, and it's often why you get all these head fake markets where you don't know whether you're going up or down. So it put in a 3 wave to start with, then another 3 wave down, and we're now putting in sort of a sub 5 waves for its C leg, which is why it's kind of, I think, trying to force us into believing that it's super impulsive. It may end up being, but for the moment, that fits perfectly with something that is about to challenge the trend line again, which I said may overthrow the equal legs of the first movement up from this morning's low. If you double that, that goes up to here, 23.38. So that is possibly a good place to short, unless we can find a reason for it to be something else. So Vivi is in there adjusting her setup to an even bigger target price, taking me on. But yeah, we can all win on that. We'll just see how it reacts. The zone that we use is 23, 47, 48 at 1 spot 618. We really need to see a 3 wave structure challenging that, because that means it is something more impulsive. So we'd have to consider exactly what that is. That could easily be this original consolidation 3 wave here expanding into a double. So you have 3 waves down, and then a 5 wave somewhere up to here, back into the 60s again, just to completely confuse us. And that would again, well, it wouldn't it wouldn't take out 23.63, or we might be looking at something properly bullish. But for the moment, until any of those are negated, the highest probability is that we're still going down. So we'll have to see how we react. So you're at 23.61.17 before. I mean, obviously, it doesn't have to hit those levels, and often the most popular is one or in between. The 1.618 we use to make sure that we're aware exactly where the whole shape can be changing into something more bullish or more impulsive, because it could be the other way. It could be going down and getting there. So to me, it's still a tricky, confusing market, and full commitment is difficult because, as you can see, you're getting whipped all over during the day. There are obviously shorter time frames way of making money out of that, but it's hard if you haven't got the time and you need to walk away. Then you're going to be getting whipsawed all over the place. Lower time frames had been interesting. I said earlier, we keep getting these bottlenecks in it, which shows you that the volatility, when the Bollinger Bands get tight, that means that vol's falling. It's a bit like VIX. Chris Bruce, have you been a bit of a reverse indicator at the minute? It's horrible when that's happening. It's the so I said here, this is when it's getting difficult, when the Bollinger Bands, the volatility is so tight that they are crossing quite regularly, and we're not getting any kind of trending going on. When these markets move, it's when it gets stuck in the one SDs, and we've had that a couple of times today. Remember, I tell you, you can keep that trend position in place. This is on the 1 minute at the moment, as long as it doesn't have 75% of its candle in the middle zones. That will tell you that the trend is finished, and you should be using that as your stop loss. Obviously, if it then goes back in, you can be looking to put it back on, but it will save you getting whipped up here. So this eventually moved up, entered into the 1 standard deviation to cross. Now, a lot of people who play Bollinger Bands, as soon as it's printed above, would be selling here, hoping that it's going to mean revert and go to the side again. That's why it's powerful to use this little rule that you don't actually short it until it actually puts in a retracement into this middle area, into no man's land. Because what happens, look, you've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles that have whipped you up to the top. So in here, this is where your stop loss would be, or your take profit on the way out. It's a very good way, once the market's trending, of knowing when to get in and out without doing any of the other, just using some old school measures. You don't have to do all the ICT stuff. So I would tend to jump there and look at 1 minute. What's 5 minute doing? So look, I mean, 5 minute, that's absolutely evil, isn't it? You've been following that down. Which of these is going to give you the signal to go up? You'd have to be quick in that 5 minutes to get out and not get dragged up to the top. So again, here, it's suggesting to us that you still stay long for the minute if you are, because it hasn't put 75% of it back in the mean reversion zone. So just be careful on the short-term shorts, as we've said, because it still hasn't crossed to the other side of the line, and that's no guarantee either. That's on the 5 minute. And 15, even 15's gone in there, and that's stayed in there for a while. So this would have been quite annoying to be trading off this, because you were just stuck in no man's for ages, and then we're in here, but they've only had a third of that. Tell you that you're in the bullish side, but now it very much feels like, and we're two-thirds of the way through this 15-minute block. That's probably going to stay in for the minute, isn't it? But I would, for short-term entries, using Bollinger Bands, sort of 15, 5, 1, and just see how they tie up. So it's still a mixed picture short-term. 5 minutes, you're still in, and 15, you're still in. So that's useful. That's a useful chart for scalping. Anything else on gold? Anyone want to look at any other ideas on gold? Anyone got any other ideas? I know a lot of people are trying to do short-term entries. Anybody got a swing idea on gold at the minute? And I hope you've all written down buy silver when gold bottoms. You must. So just a reminder for anyone that hasn't been with us on our gold journey, we're in this. The reason it's pink in the background is that is a huge red channel for the minor wave 3 we're talking about, of which 1 and 2 were over here back in December, January. We had that spike in December, if you remember, December the 3rd. And then we took ages to put in the too low 1970 odd that held, never quite broke there, did we? Got down to 1980s for the next level down to fractal waves, waves within waves. So the minute wave 2 was that low, and we've been ever since then doing this nesting 1, 2, 1, 2s. Finally put a 3 in April. And then we put the 4 in when it crossed that channel. That was when I was going to pips and pints, wasn't it, at the start of May? And then since then, we finally put in a wave 5 to put in the minute wave 3, the black, without going out for the moment. This with the double brackets and the Roman numerals 3. That's a minute wave 3. So we were in the 4th wave, and then we've got the 5th wave to come of this minor wave 3, the one I said does all the hard work. And I still think that's the top of this channel, 2500, and the top of the red extrapolation channel was 2550. So we're still within both of those. That's a multiple fib. I think it's 2.618, isn't it? Yeah. Just we took out 1.618 down here during a different wave level. So those extrapolations are really useful for having a feel for where we are. So does that make sense to people? That's the general big picture. Once we put a 3 in, we're going to have a 4 pullback, and that normally sits within the 3 and 4 of the previous degree, which we're trying to put in that 4th low at the moment. So we're talking about something that is a 300 points up and potentially a 300 points back down again. So that's going to give us huge trading ranges to play in, and obviously puts in a lot more volatility, and does mean that if you're playing on a longer time frame, you need to allow for that kind of movement and adjust accordingly. So if nothing else on gold, I'll flick onto something else. We'll have a look at the indices, because a lot of those are in a similar position. And I just think we need to be careful going too long, too early, because we had that very quick spike back up, and I think that's a connector. So I don't know how many of you were with me when I went through all these on Friday, but the danger being that the high we had in March leading into what we thought was a 3-wave move down, and this intermediate wave 4, and we've said we've been doing this 3, 4, 5 heaven, where we put in the 4 and we're now tracing out subwaves to a 5 high, then there is a chance at the moment that this could actually be a double extension, and we haven't finished it yet. And again, it's gone to a slightly new high. That's an expanded flat. What does that mean? That means that if it beats to a new terminal high, then it will retrace back below the previous first leg low. So what we've got in here as the wave 4 would become an A wave, then we've got a B wave and a C wave, or because they've got substructure WXY, you just have to wait to see how it pans out. But at the moment, very much looks like we've put in a valid 3 wave into Friday's low, a very quick bounce, which could be halfway to a full connector, or it could be valid enough to say that is done or nearly done. I think we might have one more little blowout. What we did here on Friday was extrapolate where that could bounce to when we're down here before we'd moved, saying that because this was beginning to feel like we're getting a bit deep, because this in total, the movement for what we put in as a wave 4 has gone back into what was wave 1 on the way up, then that is in the wrong place. It could be a leading diagonal on the way up, but you'd expect there to be a lot more overlapping 3 waves in this one, and it wasn't. It was more of a 3 wave, and then a 5 wave extension. So it does sit as a 3 wave quite nicely, which is just confusing everything a little bit. So expectation is that this does a double of what we've already done down to Friday's low. We're in the process of working out this bounce back. Once that's topped, we're looking for equal legs. Well, at the moment, if that does have just a little smidgen more or goes from here, we've already started selling off. That is going to put us in at a new low, and that would be a very valid and useful place for that to stop. 37,000 on the Dow, and then we'd be moving into the final sort of 5 red waves up to put in the 5th wave at the intermediate level. But again, if you remember, so they've got these 1, 2, 3, 4, 5. They'll have to come over here. I haven't drawn it in, but 5 intermediate wave here would be a 3 at the fractal above. So we're still in this 3, 4, 5 heaven. So lots and lots of potential upside in these indices once we've got the low in. So the risk return to me looks still to the buy side. We've got the seasonality on our side, and it looks like we might be getting the data coming our way. So lots of ticks for how this is kind of playing out. Boom, boom, boom. Any questions on that? Right, DXY, I'll jump to that then. Let's have a look at that. So just remember, we proved last week that the ICE, even though I'm only 15 minutes delayed, the ICE feed for the future feed for the DXY is slightly higher level than if you go into if you've got a CFD feed. But I'll stick, because I've got everything drawn on this one, I'll stick to the ICE. It's the relative movement that counts. So we're in this current structure here, which hopefully is still self-evident that from what we were talking about was getting that one more turn. We thought we were going to have a connector and then a full beam sell-off, but it seems that we had that consumer confidence number and the poor bond auctions pushing the yields out, pushing the dollar up. So we said that's highly likely we're going to do a double of this original connector, which takes us back to 105.38. We've since gone 3/4 of the way to that, put in another connector to that. So that looks like this could double again, because until it takes out this low, it's still in the double scenario. So we'll have to take it as random, because this is a clear 3 waves. Until we get a lower low, we have to consider this to be a connector, which means we're still working up, is the base case. What does this look like on a bigger time frame? So if you remember, the whole setup was that it bottomed, the dollar topped out at the end of the market sell-off in October 22. Then it's put in it's putting in a correction from that move. So eventually a dollar in some kind of super crisis might have its last hurrah and eventually rally up. But at the moment, we're putting in a 3 wave consolidation, of which at the moment it looks like this low here in July of 23 is an A wave. So prior to that, we're then putting in a B wave as a connector, and we're expecting then a C wave, which is made up of 5 subwaves. Consensus at the moment is that was the first 5 waves down into late into December, almost the end of the year. And then we've been rallying in a 2 wave. We've been nesting, basically. We've done a 1, a 2, and then what we were just looking at the lower period was another 1, 2. So it's all setting up for 1, 2, 1, 2, Just like gold to the upside, this is going to have a big 3 down at some point. So that's the backdrop to the dollar. The dollar is in a sell-off setup, but it's just keeps putting in this annoying nesting, and the lower time frame you look at it, it just gets even more confusing. Does that make sense? Forex Prodigy likes it. That'll do for me. So stick with that. So you can see I put in the subwaves over there. Just move that. So again, within this structure, there's a 1 and a 2, 3, 4, 5 to make up this minuet 1, sorry. And then somewhere within this structure, so obviously equal legs, you can see from the size of that, doesn't look quite right, does it? So it looks like we need to do a 3-wave to finish that off. And because that'll be quite impulsive, that can happen fairly quickly. Where are we next? Everyone happy with the dollar then? That kind of makes sense, doesn't it? Oh, don't tell me I've not clicked on it. Oh, bollocks. Excuse me. Let me go back to that. What a wally. Right. So annoying. And did you see the chart or not? Or was I not clicked on it? Was I actually clicked on the dollar chart while I've been talking? Cool. Yeah, you understand. Just for the people that aren't, I'll just very quickly go over that. So look, we're in the nesting 1-2 scenario. In the short term, if you remember, one more turn, we said we were coming down here. We were going to rally before we then go into a 3-wave that moves quickly. We're halfway through that. I took it out to a longer time frame just to show you where all that was. So the ultimate high was up here in October 22. We've put in a 5 waves to put in an A of an ABC. I think that is a B wave into October last year, just before we had that end of year rally in indices. So it was a proper dollar sell on. The only thing that hasn't played out really is the April seasonality of selling off. It only missed by 1%. Blah blah blah. So since then, you can see we haven't put in a new high. There's no new HH, and it looks very much like we've done 1 down, a 3-wave, 2 there, and then within it, as we just saw at the lower time frame, lots and lots of 1s and 2s building up. So they eventually lead to breakout. That's exactly what we talked about for weeks on gold on the way up at the start of the year. And once it started breaking out, then it accelerated, as you saw, and you don't get much chance to get in. So there's every chance that comes through. As soon as we get on the rate cutting path, as soon as the data massively backs up, that will happen. Okay, right. Yeah, I mean, that's the problem when you try and just they call it a heuristic, when you just take one thing and say that always works. I think obviously dollar, because it's a dollar currency, the gold, it's priced in dollars, then yes, it has a high correlation to dollar moves, but it has so many other things attached to it that it's not nowhere near a 1-for-1 correlation. In fact, it's been easy to prove in the past. We can overlay that with the dollar, and you'll have lots of positive correlation as well. It's can be annoying at times. Press share this tab. Right, is that showing silver? That is showing silver. Excellent. So again, we said that silver on the way up, if we overlaid these with gold, and you'd see it from the gold silver ratio that we sometimes look at, it's beginning to really narrow, which means silver is catching up. And on the downside, it's not quite as aggressive. So that's giving you what they call a log normal situation. It shows you that silver is beginning to outperform. So when it bottoms, when the gold price bottoms, that's why we want to be on silver, because it is going to really outperform on the upside. And there's lots of fundamentals why that's the case, but we've now got it into technical, which is great. And that sits with the whole super decade cup and handle that we talked about last week as well. So that's when, now we've got the breakout, you'd expect a very quick extension of that handle on breakout. So just a small point, is that clear? And we are we've touched on that zone, buy zone I was looking for. I'd love to see this bouncing around the bottom of that channel. We can possibly get that and a break with gold. Then it's full Monty, I think. Just briefly we'll just go through the indices. S&P 500, they're all similar charts. They all look they've done a 3-wave down and plus a connector. Any of it, once you've got the valid 3 waves, of course, any of them can rally. It's just that they're faltering a little bit. The ideal, and the why I'd like to see it as a double, is that will hit the long-term uptrend on this move between the 2 and 4 waves. And it's also got another 2 close by. So that would make sense for it to bounce off that. That would be really nice and clean. We're just looking for lovely clean structures, if possible, that are easy to read. So look out for that. If we do start selling off again, that's the most likely area, and it's going to be sort of 51.50. Nasdaq, Edward, before I came on here, was saying it's just looking super bullish. Obviously, it's going to get driven by Nvidia and the techs, high value techs at the minute. We've had that absolutely incredible move on Friday. Hopefully you were playing that. I was getting told off a lot by the wife because we're supposed to be watching a film, and I was on the mobile going, what the hell? The kick on, come on. And that, again, as I said earlier, is making the shape of a connector. We tried to predict it again on Friday's live, just as, no hard and fast rule, just the fact that that was a 50% retracement. Where would we then go if we had a 1-for-1? And look, that kind of lines up again, smack bang on the bottom of the trend channel, which we've proved a number of times is really working well. These were all previous extrapolations of other wave sizes and Fibonacci's that were labeled to start with. When I readjusted the trend channel last week, it just happens to be exactly where it's predicted to go once we get the low in. So very happy with that for the moment. This again, absolute fantastic buy area if we get it 17,800. So any kind of continued wobble confusion during this week, let's hope we reach those, because it's, again, that is full port time if we can get anywhere around this trend channel crossover. Sagittarius, someone after my own heart. I'm a Sagittarius. The idea for me is that we still fail on this rally, but it is getting into the channel overthrow. Just very quickly show it you, but so my idea, what we're saying, expanded flat to challenge this trend channel here, potentially go to the equal legs of this morning's move up, the retracement, and then to go again. I'm kind of expecting this to run out of steam just outside what's drawn as a circle at the minute. Beyond that, then we can start thinking about other things. Ben, yes, I'm predominantly Elliott wave, and then I'll put other indicators on. Sorry, share this tab, start again. Right, here we go. The expanded flat idea, we're in this trend channel down. I think that we're setting up to go down to 22.50. We're in the first of, we're sort of doing nestings 1 and 2 down. There's 5 of these sub-black ones to come. That there's going to end up somewhere in here. Is the highest probability at the moment. Now, obviously, this can develop, and if we get a rally up to here, the 1.618 for the current structure, then it could be something more impulsive. We'll deal with that when we get there. At the moment, it's kind of playing out with an expanded flat for a wave 2. If it does start selling off, it should go very quickly and quite a long way, 3 or 4% in not a long time. So just be careful on longs. Make sure you stop loss because it could blow up very quickly. Right, where was it? Back over here. So I was just flashing through some charts earlier, and obviously that's the semiconductor index, and it is obviously you've got the NVIDIA charts. They're all taking a little bit of profit, having been the leaders. So we just need to be careful. This is one of the reasons why we might be about to put in the pullbacks, because the heavier weight stocks did hold up in the main in last week's sell-off. There was a bit of end of month. What the hell was that rotation? Not sure whether that had anything of note. And we're now back into June, and we're starting to see pullback. And that NVIDIA was selling off on Friday, having the markets selling off aggressively here as NVIDIA held up at the first part of last week. So the news flow is suggesting that we're going to get a bounce in NVIDIA today. It's all about how the equal weight bit comes. Will people just keep throwing money at it because of Friday's rally, or is it all going to fade? There's a good chance that the bigger stocks fade in the short term. Will rate cuts mark the top of the stock market rally, do you think? Well, often you do. You do get a classic case of, buy the rumor, sell the fact, and it's most likely that they're going to, if they have to go, it's going to be July or September, and more likely September. So that would fit nicely. We haven't really had a proper melt up yet. Even that the rally from April the 19th has been quite orderly. So there is a sense beginning to build, and obviously that stock split in NVIDIA that we talked about could be the catalyst for some more money coming back in. Also, once you start believing that rates are changing, then there's all that $6 trillion in short-term money market funds that will suddenly start scurrying for a home. Then often you get retail money coming in late to the trend. That would be an absolute classic of retail longs right into what would then be a top. I don't think it's a top for the overall move, the whole 3-4 heavens, if you know what I mean. But what it will be doing is taking us into a higher degree top, which just the consolidation 4 is going to be at least a 10%er. This is what we have to be aware of. So when people talk about bull markets and bear markets, they're also in context with bigger pictures. So I'm expecting us to have a good consolidation fairly soon, but also I don't think it's the end of the world of the whole bull markets like some people are trying to describe it as. So we've done those 3. Nikkei 225. A couple of you did play it. It went like a dream, didn't it, through that channel? Absolutely nailed it. 5 lots of 3, and then we said it had broken the channel. We expected it to do a double, so don't buy yet. Wait until it hit down here, which it did. Unfortunately, I forgot to press go to tell you it had jumped around here, but it has kept going. We said, would it do a double? It's actually done a double. So even if that's a connector, what have you got out of that? You've got 1,200 points, haven't you? Nearly 3.5% rally. That'd have been a great thing to do, because we said once we thought it had bottomed that that's a stop loss. So even having a 300-point stop loss, you've still had a 4-to-1 triple R. That's good for anyone's money, I think, isn't it? And then now we could easily come down here and put in another set of 3 waves just to finish it off, and put in the 2. Now this is important here. 36,834. the reason I put that in, it's relative to the previous minute wave 4 that we've got in place. We're supposed to be tracing out the 5th wave up. We don't want that invalidating, otherwise it's an extension to that original sell-off, but there's potential more downside. So we'd like this all to still remain fairly flat. It was a sideways movement. We said it wasn't the leader. We do want this to follow the path of everyone else, and hopefully, therefore, the sell-off won't be big. Very similar to that is the DAX. And the DAX obviously is about to see the first rate cut cycle. I think because of the state of play of where Germany is in Europe, then it is going to be a boost rather than the top position. But we have got a relative 5-wave top ahead of us, the first wave up. Now this has traced out a double, which around here we said there was a danger of this being a connector rock because it's so flat and then coming off. It's done that. The question now is, are we like the other indices? We've got a 3-wave in. Is that a connector? We're about to make our way down here. Once we're here, we're still looking for that wave 1 equals wave 5 breakout, because the middle wave was quite an extended wave. So that is telling you that you're expecting 17.5 to 18.3, so 800 points ish from whatever this low is. So we're looking at 19,200 plus when we break from the low, aren't we? 19,000 wouldn't quite work. Yeah, 19,200 is probably where we're looking at. So it might just be a small extension of wave 1 equals wave 5. Rate cuts will hopefully cause a broadening out of the rally at the mid and small caps that are more rate sensitive. Can you see upside on the whole rally being led? Well, like I said, the irony being, I think the fact that we are seeing some broadening out is causing a little bit of the sell-off. So as you get more movement in the equal weight in indices, which shows you that the other stocks are having more of an impact, you're going to have at the normal level index a sell-off there, because the biggest stocks will take the market down more than the smaller weighted takes it up. But in the short term, while they keep bringing out good news, it's difficult. But we are due a little sideways move from Nvidia and its pals, which might just be enough to get in this final low before we have the full-on investment blowout movements up. But anyway, DAX, it could break out. We need to see a relatively small new high to suggest that is even a 5-wave. But that could equally end up being a zigzag, which doesn't break much out of this narrow channel we've got and then sell off again. So in all reality, we can't really get super bullish on there until we break out this previous high over here, which is, it's only 1% away, but it's 18,900. In which case, that wave 4 comes back into play as being here. We can get a little bit more bullish. But so far, it's been very meandering, hasn't it? It's not been a lot of what you describe as impulsive behavior. I mentioned it, US UJ. We're still on the daily chart here just to show the overall move. They're doing good chatter. The Tokyo CPI helped on Friday. But in order for this to have potential breakout, it does need to have a new high soon, probably. Otherwise, this is a 3-wave and it's just beginning to break down. That, again, all depends on what happens with the dollar. With UJ, does it come up here and have a little fail? Little tempter? Or does it stay totally locked jam in this whole carry trade for the world, puts in a 5-wave, then puts in a deep wave 2 consolidation, which will bluff us? Maybe there's a tiny bit of chatter, a tiny bit more intervention, and still be part of a move to new highs. It's all a bit complicated. It's a tough one to play at the minute, but I do think at some point there is a new high in that, just to kickstart all the central bank action. Done it again. Why is this not? Sorry again. We're on UJ, just showing here that needs another relative new high just to put in a more bullish pattern. And you can put that in and then do a deep sell-off back down here to the end, towards the intervention level before it goes again. It's hard to tell really what's going to happen until it's actually put in a valid 5 waves. Euro and GU, we've both got this problem. We need the dollar to finish that pattern off. So if the dollar is going to keep going up, then this is still going to be in the pattern. So it has got a valid 3 wave, wave 2 in, but it's only got 3 waves up so far to its current movement high. So that at the moment is a connector and selling off again in a 3 wave, 3 swing, 3 wave pattern to put in the wave 2 down here. How do we negate that? Well, we need to have a new high for the move. So 1088.24 is important in the near term. GU, exactly the same idea. That might be a little bit more advanced in terms of its wave structure. It's put in a 3 and we are 3 waves down. Is that a connector? It feels like we are going to get this dollar strength short term, just to bring this off to put in a 2 either here at equal legs or somewhere in between. Again, to negate that, we need a new high here at 127.62. Something I introduced in the chat is the US 10-year note, and obviously I drew this before it broke out, but I did say it looked like a barrier triangle to a little bit more high, and it looks like that's happened. That's gone nicely. So yeah, because the reason for that, if you've been following the waves, that you got a 1 and a 2, and then we've got 5 subwaves in there to give the 3rd wave, an ABC down here for a 4th, and then we'd come up here, and it was all rather strange. We hadn't put in a new high, and we were doing this upwards and downwards, very choppy action with a barrier level across. If you get a barrier horizontal level in Elliott waves, they generally get broken out, similar to flags, etc. So this was almost guaranteed, very much like the UJ 152 level that was going to break, and that's come through this morning. That could now be a valid 5th wave with these 2 little pullbacks there. So that could have put the 1 in which case we could have a little bit of choppiness to confuse us all with the data. But it feels like, to me, this is definitely a 1-2 in place. So we should be in a bullish pattern. So the counter trend sell-offs are against an upward trend. I'd expect bonds to rally, which is telling us that yields are coming down. The yields are only going to come down really for weaker data or some kind of leveling out of expectations. So it sounds to me like net by the end of the next week or so, things are going to be a lot clearer to a weaker dollar by the look of it. Certainly wiping out the rate hike idea, and if not, moving further down the curve to cuts. The VIX and the MOVE index, we said if we started to see a bit of consolidation, we'd have some trading range back up to 15, 16. Friday was well on its way to going for breakout, and then you can see massive reverse candle there because we had that late rally and it was implied vol back through the floor. So we're stuck in that trading range, not really worried about the market until we get up into here. Obviously, we've made quite a move on the first one. We're putting a connector in. You know, we might double this. So we'll be coming from 11 to 15, 13. So we might get to 17-ish. And then it's mirroring very much the move in the bond index. If anything, I'm expecting them to stay in their trade ranges. So continue challenging the previous lows we've seen. FTSE just on the daily without even having moved anything for a while. That does have the look of a 3 wave down. Hasn't quite reached one for one. We've put in a consolidating connector, which again we'd put in on Friday when we were going through them just as a guesstimate. Hasn't gone through that yet, which is implying we're going to have a test of 8,000. That would, with the way the UK works, they do like to test the round numbers. So that's another reason why I feel like this isn't a ridiculous assumption for the doubling. And again, as I said, with the way the fundamentals have changed and some of the underlying earnings, quite like the UK. So we're looking to buy around 8,000. So that is most of what we normally look at. Oil I didn't even put in the pack. I'm just so fed up with it. Just look at it. Another boo-boo by OPEC. I told you when we started months ago that they've spooned it the way that they did those cuts. I think they upset America by it. They might have left them alone with the cuts. It's when they started trying to fix the price as well. So that opened up the door to America to pump away, get the price down. That way, OPEC have not only cut their supply, but they've priced themselves out of it as well. Just absolute joke. And I said that the danger we've got, if this didn't become impulsive, is that later on this could go massively south because they will have to come back in and start trying to sell. At some point, money will count, so that will give Biden the win. He'll get the inflation down from the energy side, and then he'll be able to replenish the stocks that he's been using, the special reserve at a lower level. So at the moment, America are in the ascendancy on that play. And I mentioned earlier about the whole contango thing. If the expected future price is lower than the futures price, then that's a negative when you're in a contango space. So that means the futures prices on the months further out that are higher will attract selling to come down, and that just adds to the whole dynamic. It's very hard to get out of that if it goes against you. So that's probably all the charts that I've got. Now, who was just saying US dollar, Swiss franc? I don't really look at that a lot. It's two kind of safety currencies in a way, isn't it? Where are we? What are you seeing in it? What are you thinking? I haven't even got it set up. Boom, boom, boom. Anonymous, what are you thinking on UC? It's all a bit messy, isn't it? So, any thoughts? Anyone out there got any thoughts on US dollar, Swiss franc? It's almost the same picture as the dollar itself, isn't it? Obviously, Swiss francs are in cutting mode. I mean, it looks like it's had the same old classic, an A connector, and then a C there. And now we're bouncing. Is that a connector, or is that the start of a new move? It hasn't had a new high yet. So if anything from this, and that hasn't had a new low either. Dollar strength, short term. And from here, that was a equal legs 3-wave, more or less an expanding flat 3-wave. Don't like that. So 1, 2. And this all looks like a very complicated sideways pattern, doesn't it? Probably, if anything, once that's finished, we're going to put in a final wave. Yeah, I think we've got a 1, a stop, a 3 wave, and we're putting in a 3 wave or a 7 wave based around this. Maybe that's an expanded breakout because we did get a lower low relative to that pullback. And then we've got one more new high to come in that. It's just a case of finding where you want to come in. Boom, boom, boom. Don't know. Never really played US dollar, Swiss franc. My first instinct is that does need a new high to finish. But, right now you can put it, if you're going to go for that new high with this as a stop loss here, 89, 88, 40, just in case that is becoming some form of extension. Don't know. What do you think? Are there any other questions? I'll try and have a view on US dollar, Swiss franc for next time we come back. Is anyone still there? So hopefully you found some of that useful. Hi, Bletchley. Hi, Forex. Prodigy, Anonymous. You see this? Yeah, Cam, it's a tricky pattern at the moment, that. I mean, it feels like there's one more high in it before it puts in a proper consolidation. But these are messy, we've got lots of complicated, messy consolidations in play at the moment, and we need a bit of resolution. Institutions should be short Swiss franc, yeah, because it's ahead on the easing cycle. And yeah, and obviously the dollar needs to roll over, so kind of sits. Was that Friday's CFTC stuff? Yeah, CME. Edward Ogarkut, NASDAQ and US 500, what about them? Yeah, no worries. I will have a bigger look at that one. Edward, what are you looking for? Is that Edward from my chat? Yeah, hi, mate. Like I said, I do think that we're actually putting in connectors. I mean, we've got to be careful that it does break away, because we had such an impulsive move up. But I think that's put in the first half of what is a connector. The only reason that connector's there is because we were guessing where it was going to be. And the reason being, this blue trend channel has been so accurate. It feels sort of natural to get a test of it before we move up. So we're in this position where I've got a bit of confusion, two-way pull. We've put in what's more likely two sets of like an ABC, a three wave, two lots of three waves. The connector never put in a new high, which was the first kind of warning signal. We remember last week we thought we might break out here, then we sold off, and then it's all about the speed of that into a very funny end of week closing. Kind of, we knew we were going to get a PCE jump. It kind of worked. Then we had the unwinding of a lot of the negatives, etc. We've obviously got positives in the background from Nvidia, etc. But is it now repetition of news short term? I just thought this would feel more likely to be a connector, mainly because a lot of the other index setup look very, very strongly looks like they've got connectors in place, and expecting an equal legs of this first move down. So I was trying to find where that top would be. So that actually today, where's that one? That would move to up here. So again, it's implying that we might have a bit of choppiness, which is maybe down, up, and then eventually down next week. And that brings us into the Fed decision next week, doesn't it? And it's the commentary really that counts. So every chance that we are a little bit skittish with whatever the data is this week, and then following through, equal legs comes in here, sort of 17,900, and then we're off to the moon. So what do we need to look out for? This needs to get more of a 76% retracement really to start getting us interested for breakout again. We got faded last week when we were looking at that pattern, which is a real shame. So until this, just the fact, look at what's going on. It's getting very choppy. From here, it may do a double of what that move is. So that potentially brings us up to here. Gets us, it's still, in the zone where you can get connector and sell off. So I'm kind of leaning towards that at the moment. And take out the super end of month closing rally there, then do we really believe that this is as strong as it looks? How's the data going to play out on the side of that? Again, if we start seeing that growth slowing inflation narrative, this index gets hit harder. So again, we need to get through the growth worries of this week, which is another reason why it might just fade. I'm leaning more towards it fading and then rallying on rate cut hopes rather than necessarily being the leader into better data. I think it might be a kind of reversal effect. Oh, please. Sorry, didn't have you, wasn't showing you that then, was I? Third time today, must try harder. Right, yeah, so just talking here about just the lack of impulse at the moment. That's either connecting to go a little bit higher. Remember last week we had this counter trend rally up to here that didn't go to new highs. We thought we might get a sell off and then go. We had the Elon Musk news, didn't we? And then the only really impulsive thing since then has been the end of month closing. So that could easily fade. I'm leaning towards the growth story, bringing the rate cut story back. So we're going to get growth panic, potential price stickiness. We've got the Fed next week. So this kind of period here could very much be a replication of what we had last week and the previous week into a double scenario. I said this channel has worked perfectly for some time. So I'm kind of expecting it to be respected, and it lines up with the equal legs super sell-off. But what's the other way of playing that? So as it comes off again, you've got this low here to use as stop losses. So if things look like they're changing as we come off, then that could easily become 5 subwaves up, and then you're doing a consolidation. So you get the chance to play that as a stop loss breakout for longs if you think the narrative's got too negative. S&P 500, I said again, we've put a connector in, we still haven't put a new high in, and it's another one where equal legs just sits neatly with the long-term uptrend. So just like things to be nice and tidy. So that's why I'm leaning on these all being connectors, and we get a little bit more downside just while we're nervous. But again, it's all about fundamentals and fundamentals of technicals. If you get higher highs, then the uptrend is back in place, or should be, unless this is a very complicated expanded flat, etc. So does that help with you knowing what I'm thinking? So all we've got left now is a spot of ISM and so obviously Q3 we get the national PMIs, which have tended to be a little bit stronger than the ISM, but ISM's a bigger and more respected survey. So stick to that one really. And we'll see where we are. Hopefully that's been of use. Keep in touch, come on the chat, send me messages. Good luck with your trades. It's all feels a bit complicated at the minute. It will settle down. And we'll speak soon. And look out for Alpha Futures. Thank you, Bletchley. Thank you, Vivi. And thank you, Forex. Thanks a lot. Hopefully it does.